It's time for the big three stocks, three charts, three trades. I'm Tom White. Joining me now is going to be Kevin Green, senior markets correspondent here. Kev, we got a few charts to look at here. The first name we're going to take a gander at is Crowdstrike. Stocks had a good rebound from that outage that they had in July. It's back to levels that we were at prior to that happening. But it's been a nice rebound here for Crowdstrike. What do you got for us?
Yeah, we have seen a nice little recovery here, Tom, but now we are actually stalling out here a little bit, and we are hitting some areas of resistance. If you kind of look at the chart, it's been pretty erratic, let's say, for the better part of 2024. We had the nice highs back in around end of June, sitting at around $398.33, and then we had that bad news, and so we saw this flush to the downside, and ever since then, we've been in this nice upward channel here, this bullish channel, respecting both the upside and downside when it comes to those channel lines, but now we are kind of flagging out. Now you could say this is a bull flag that's taking place, basically meaning that we're in a bull market, but we are kind of stalling out. Or this might be the beginning of a little bit of a fade. Now, the $345.45 level is going to be the first area of support. That's what we have been really relying on pretty much all of December here. And if we do get a breakdown, I have a Fibonacci retracement from those highs of $398.33 down to the lows of $200.81. And the next area of support is going to be the 61.8% retracement level, $322.82. And then you're looking at the 200-day moving average, which is sitting at around $316.71. Now, when you're looking at the RSI, we are making lower lows as well as lower highs. That's something to be mindful of. That just kind of shows you that the price momentum is stalling out here a bit. And they do have the MACD actually in a bearish cross for the most part here, 12 EMA below the 26 EMA, and it's about to test the zero line. So once again, maybe it's just a consolidation before we try to push higher here, but this does look like we're hitting some lofty levels, and it does appear that the market really wants to try to maybe take some profits going into the remainder of this year and maybe the start of 2025.
Yeah, we had the hack of the Treasury Department overnight reports on third-party hack there. Kevin, when you look at this, the concentration in a lot of these cybersecurity names, it kind of is reflective that, hey, we need more cybersecurity. When government agencies are getting hacked by Chinese, imposters or whatever we want to call them at this point, it kind of reflective of the need for it, right? But some of these stocks are getting a little bit lofty as far as valuation goes. When you look at this one from a trading perspective, you mentioned those levels. It's just above its 50-day moving average, which has been above since mid-September. How do you want to look at this one from an example trade?
Yeah, so if you kind of look at that hinge or that flag pattern, if we do see a little bit of a breakdown here, this example trade is really trying to capture that. This is a bearish trade looking at a put vertical spread here, buying the 340, selling the 320, doing this for $5 here. Now, this is for the January 17th expiration, the monthly expiration. So we have about 3 weeks until this does expire here. But with the max loss going to be the debit paid $500 and the max profit could be up to $1,500 with a break-even point of $335 even here. Once again, this is a trade to be able to capitalize on any type of material pullback. And if we do see a break of those critical support areas that we've seen back in December, this would be a trade to be able to capitalize on that. And it's also risk-defined. So if it does go in the opposite direction, if it stays where it's at right now or continues to move higher, once again, that max loss is going to be that debit paid $500.
Kevin, when you look at this, it's directionally biased, right? You're offsetting some of your risk on this by selling an option that's further out of the money to the downside. Risk reward set up pretty good on this one. With this type of trade, though, Kev, I think one of the things that I always like to look at in directional plays like this, yeah, you need the stock to move lower, and you've got 17 days till expiration in this one. But it also gives you some flexibility as far as trade management goes, right? Because maybe we'll get a steep down move here to kick off or to start the year before expiration, and that might allow you to either close a portion of it or all of it ahead of expiration, right?
Exactly. Yeah. If it goes in your direction, and if you are, believing that the profitability on that trade is sufficient, you can take some contracts off, barring there's a market in order to do so here. So yes, it does provide you a little bit of time, a little bit of flexibility when it comes to trying to manage this trade. And we have seen that these pullbacks in the market, the broader equity market, or even when you're looking at CrowdStrike, really don't last that long. So you're exactly right. You want to be able to try to capture any type of profits in the event that you do get a move that's a lot quicker than what you have expected. So this would allow you to be able to do so.
Yeah, and on a percentage basis, not a big drop to get below that break-even one on this at about 335. So good look at pretty good risk-reward setup, either offsetting it, maybe a long stock position if you want to use this type of strategy as a hedge, or just speculation to the downside if you think it's going to weaken up over the next 2.5 weeks. All right, good look at CrowdStrike. Kev, the next stock we're going to take a look at, I think everybody's heard of this one. That's Nvidia. Big gains here in 2024. It's taken a little bit of a pullback, nearly 10% from those all-time highs that we saw just over a month ago. What do you got here for us in Nvidia?
It has stalled out here a little bit, but the bullish trend is still intact. As you kind of talked about, we've seen a nice run over the last year when it comes to the stock. And now we are starting to see a little bit of a battle when it comes to the 20-period moving average, which is going to be in blue. Now, the first area of support that you would like to see is $129. That actually has some confluence to previous areas of support, as well as that upper trend line or that channel line. That bottom support line there is pretty much hitting that 129 level as well. So you'd like to see some buyers stepping in. And if not, if we do see a break, 120 is going to be your next area of support. That's around where the 200-day moving average is. And you do not want to see any type of break below that, Tom, because that point of control, which is in red on that volume profile, is sitting at around $89.86. Now, the RSI is making lower lows as well as lower highs. So this pullback that we've seen is actually being complemented by that momentum indicator. And we also have that MACD, which is trying to cross higher. That 12 EMA did actually cross above that 26 EMA, but it's still below the zero line, which is still bearish. But that's something to kind of being mindful of. Any type of push to the upside here, you can look at 150 being your area of resistance. You and I know we watch options flows literally every single trading session. And there's still a lot of confluence or a lot of trading activity at that 150 level when you're looking at individuals selling calls against their long stock portfolio here. So a pullback for now, consolidation for now, bullish trend is still intact. Any type of break between those, below those support areas I highlighted would be a cause for concern for shareholders. Yeah,
and Nvidia had some support over the last couple of weeks around that 130 level, which was a 100-day moving average. I typically don't look at that one, but it acted like a good area of support, still just above 130 for that 100-day moving average. But when you look at this one, Jensen Huang, he gives a keynote on January 6th at the CES conference. He's typically pretty bullish on this one. How do you want to look at this one from an example trade?
Once again, the fundamentals for NVIDIA is still intact here, and obviously any type of commentary come from the company or their leadership is going to be probably bullish for the stock. And you can also make the case here, Tom, that it could be a defensive type of stock as well. We had that pullback in the broader equity market a couple of days ago, and actually NVIDIA was green on the session. So that could be another area to kind of focus on if you do believe that volatility might creep in. This could be a safe haven for a lot of traders here. So keeping that in mind, looking at the January 17th, 140, 145 call spread here, buying the 140, selling the 145, doing this for a debit of $1.80. Now the max loss on the trade is going to be the debit paid $180. Max gain on the trade could be up to $320 with a break-even point of $141.80. This is a stock, once again, that actually can move on an intraday basis. It's not out of the realm of possibility to see $4 or $5 moves within the stock. So that break-even point is definitely within reach when you're looking at this trade. Another flexible trade as well. If it does go into your direction, you could actually take the trade off before the time of expiration. And once again, we've seen some buyers really step in at these key areas of support. That 127, 129 level has been very critical. And even over the last couple of trading sessions, the 137 level has been an area where buyers have stepped in here, Tom. So trying to take advantage of an upside move, trying to take advantage of the potential seasonality dynamics of selling pressure in the broader equity market, and maybe investors looking at NVIDIA as that safety trade. And if that is going to be the case, this could be a trade, an example trade that could profit from that.
Yeah, that break even of 141.80, that's only about 4% above the current share price in there, Kevin. But you are buying a call vertical that's out of the money to the upside. You're giving yourself about 2.5 weeks on this one. When you look at risk reward setups like this, the risk that, as you mentioned, $1.80, right, on this type of trade, the debit that you pay on it, reward's pretty good, though, when you can make $320 on this if it goes above 145 at expiration, right?
Yeah, exactly. I mean, you're looking at about a 2.5 to 1 risk reward ratio. And when you got to go a little bit out of the money there, obviously those options are going to be a little bit cheaper, and then you're not paying as much when it comes to intrinsic value. And in fact, this debit spread here, when it comes to the call side, does not have any intrinsic value being built into it. And once again, you're looking at a stock that actually can move with the average trading range being, for the most part, a little bit higher than what we've seen from implied volatility over the last couple of trading sessions. So you definitely need to move in order for it to go to your direction. But we have seen these price levels before. That 140, that 145 level is something that the stock can attain. And any type of breakdown, once again, you're managing risk as well. It's risk defined, so you don't have open downside risk right now. And when you're looking at that risk reward, once again, about 2.5 to 1 seems like a trade that a lot of long call or even long put holders, when you're looking at debit spreads, tend to like to see.
Yeah, and you're offsetting the bullish part of this trade, the 140 long that you bought by selling the 145. You're collecting over $2.10 on those upside calls against your long 140, so reducing that initial risk to get into it, and that also lowers your break even on this one to the upside. All right, good look at the Nvidia. Last one we're going to talk about here, Kev, is Micron. It's been under pressure. It's relatively flat so far this year. They've got some, a cyclicality and seasonality in the memory chip space once again. But if you look at Micron, high bandwidth memory chips needed for these data centers is 3, 4, 5 times more than needed on their conventional tech chips. So when you look at this name, it's had a good base around the level that it's at right now, right?
It has, but when you're kind of looking at that business, it's still a fairly small portion of revenue, and their leadership has talked about maybe some capacity constraints to try to meet demand, which is not obviously going to drive top line revenue. This is kind of that make or break moment when it comes to Micron. You are seeing a little bit of a test of an area of support. I have a little bit of a range here between $80 and let's say $83, $84 here, where you'd like to see some buyers really kind of stepping in. But if you kind of look back, we have seen this level actually break before, and there's actually still a gap to be filled. When you're looking at that volume profile, we're trading right below that point of control. So we actually did break a key area of support here. And now that first area of resistance is going to be around that $89.12 area. And if we are able to recover, try to break above that 20-period moving average, look at a range between $98 and $113. And any type of breakout above $113, your next area of resistance is going to be $118 here. RSI, you can see that downtrend is not surprising. We've seen the price action when it comes to the stock, and the MACD is actually in a bearish formation. 12 EMA is below the 26, and this is the second time this year it's actually been below the 0 line, and it could go a little bit lower. Once again, this is kind of a make or break. If buyers don't step in, you might see another flush when it comes to Micron, and we will be getting earnings from them over the next 60 days or 90 days, and I think that's probably going to be the bigger catalyst for the stock, either to try to maintain these current levels or potentially re-rate to the downside.
Yeah, it's holding that $84, $85 base that we've had over the last 6 months or so, KG, but a big slide post-earnings. There's a pretty good earnings report, but they guided for the current quarter to be a lot lower than the street anticipated, almost $1 billion in revenue that they cut. But you got an example trade for us in Micron. Break it down for us.
Yeah, so Tom, if we do see a break of that $85 level, this example trade is actually taking a bear stance on the stock. This is actually buying a put vertical spread, buying the 85, selling the 80. Once again, this is the January 17th monthly expiration here. Doing this for $1.60, which is the max loss going to be $160. Max profit, if the stock is below $80 at the time of expiration, would be up to $340 with a break-even point at $83.40. This is just taking into account that we are at a make or break. And if you do see a breakdown of that 85 or the 84 level, you can see a vortex of selling pressure hitting the stock. And the next area of support is going to be $80, which is why I chose that strike for this example trade here. Once again, kind of talking about that risk reward ratio too, a pretty decent one if you're kind of looking at, almost a 2-to-1 risk reward ratio here. And then also risk defined. So this is trying to capitalize on a downward move on the stock, and if not, and if it does reverse to the upside, you can manage the trade before expiration as well.
Yeah, another directional bias trade here with a pretty good risk reward setup, KG. You only need about a $2 move to the downside to get to below that break even on this one. When you look at this type of trade, Kev, I always talk about it like, hey, I can use this for speculation if I think it's going to weaken, it's going to break through the support area that it's had, but it's not like you need a monster move to get max gain on something like this when you're looking at hitting singles and doubles on daily trading, right?
Exactly. And when you're looking at the premium, there's not a lot of implied volatility being built into these options at this point, which is another reason and another area that you want to look at. If you have high implied volatility, you may want to sell spreads rather than buy them. But this one is relatively low compared to what we've seen for the price action. So you want to try to capture that. Once again, you're looking at trying to see some technical breakdown when it comes to Micron, and you need about, you have about 2.5 weeks in order to do so. But the risk reward ratio here seems favorable for those that want to go long put spreads to see if they can capitalize on any type of fundamental breakdown. And there is a vortex there that could be had if we do see a material breakdown of 84.
All right, great breakdown for us on that example trade. Looking for some weakness there in Micron. All right, thanks to Kevin Green, senior markets correspondent here, helping us break down three big names, CrowdStrike, Nvidia, and Micron. This has been the Big Three. Keep it locked to the Schwab Network for even more market content every day.